Hello, this is the chart profit video, over an hour into the trading day on the 3rd of August. This from the pre-open. This is the E-mini S&P. Made a point of saying that the imbalances that we've seen in the market, like this aggressive buying here and this aggressive selling at this point here, which usually indicate continuation, did not do so. And I've made a note here, Wednesday. On the rare occasions this happens, nearly always means a point of control of some degree is emerging between the two levels. In this case, it's probably currently this minor here, 28.15. This is all day frame stuff, and that 28.15 is the level that we want to watch price relative to. It's worth monitoring that, really, just the strength of weakness in the day frames. This is all minor stuff. 27.72 remains the first level support as noted here. Price below that level would be the first sign of weakness in the longer term. Looking at the pulse chart, we translate those imbalances from the intraday chart here. So significant selling shows up as red, as you know, on the daily chart here. It kind of puts it in perspective. We had an improved environment in the pulse chart at the bottom here, with the breadth and momentum above zero for most of it, apart from this little dip here, indicating pretty healthy technical situation. And you can see that when the green bars appear indicating significant buying, usually it's pretty effective to see the market moving higher. And we've had some day frame selling with green down here, and the chart kind of tells the story anyway. It's not really been effective on any time frame yet, even from a really basic kind of chart reading perspective. This high here becomes support here, if you like. Price below that would indicate some weakness, but there seems to be, despite what we're looking at here on the chart, just an awful lot of bears out there at the moment, and that in itself probably isn't that unhealthy. The most glaring example being, I think, in the Lipper US fund flows data. I follow a 4-week flow, which is this black line, a net flow, money in and out of equity funds, including ETF. The net 4-week flow has just turned positive. It's at the positive level at the moment, sorry, at the zero level at the moment. But just here, which was just 4 weeks ago, that flow reached a negative 39.3 billion. That's the largest 4-week outflow I have in the database. So more money flowed out of these funds in the 4 weeks prior to that point than I have recorded before that point. I think the trade war rhetoric was ratcheting up at that point, and it's spooked an awful lot of investors. The market is up from there. If you look at the chart, certainly in the US, the S&P large caps here, you can see no reason why this previous high couldn't be tested. And just back to here, this is where we will see the first effective or convincing sign of weakness on this day frame here, and I don't see it yet. I said recently back on 31st of July that this selling can be considered reactive because it's taken place above 27.72. A couple of other sentiment polls. We're looking at the public poll here from AAII. Bulls were just slightly lower this week to 29.1, bears slightly higher, 32.1. 4-week moving average of bears minus bulls, this black line just above zero. Pretty neutral reading again from the Investors Intelligence poll, the newsletter writers. Bulls percent slightly lower, bears slightly higher. As I've mentioned before, the last significant reading here was when that 4-week moving average of net hit something like an 18-month low at this point here. Again, these being contrarian indicators, we've seen the market up from that point. Lots of bears, important point, measurable multi-month high in bearish sentiment, and then the market rallies. And prior to that, when the 4-week moving average hit an extreme high over here at the top. Okay, let's look at the major charts. Last couple of weeks since I did the last video, some levels have changed, not on the spider, the important level 271.70, that's the 18-month support. As long as price is above that in the longer term, it's in a strong position. This is the UK's FTSE 100. Slight migration there in the 1-year point of control, as at 77.06, this level here. That just happened in the last couple of days, that migration. That's an important level. Happens to be the halfway point from here to here, from the high to the subsequent low here. So we have that kind of bell shape going on again, that bell curve shape going on. An important level. It would be significant if the FTSE could get back and print some time now above 77.06. Just checking my data back on the DAX over the last 2 or 3 weeks on different time frames, and we can say that the 5-year on this chart, certainly on the daily time frame, has moved to 12,450, and okay, ideally you'd want a higher low above the halfway point there. That's the blue dotted line off these two. But this hopefully will be support for this chart. Price back below that level printing time would put this chart into a weak price location. This is TLT, the T-bond ETF. The levels remain unchanged here. We said at this point we were looking for a clear higher low above the major at 121 to indicate higher. We didn't get that. The first test took TLT back below that major, which immediately put it in a weak position, and the support is at 118.50, which is the 6 month. So this is like the local controlling price. This is the big one, and we've just tested that support and bounced a little, and we saw back over here, as mentioned in previous videos, that was a kind of encouraging sign. So we need this level to hold, which is 118.50. Price back under here, there's no support. It's probably looking for new longs. You probably want to wait for this pattern above 121. USO, the oil ETF, 12 month remains at 12.79, and as I've been saying for a long time, as long as price is printing above that level, which it is, giving us higher lows, higher highs, this is a strong looking chart. Price back below there, agreeably, it's a way down, would really give the chart a different look. It's also possible that this controlling price, this 12 month, could migrate higher, possibly, and that will immediately change the perspective. Okay, we're looking at the gold ETF GLD. Interesting chart. As you know, we broke below the major at 121 at this point here in June, and saying weak price location from that point. We're still in a weak price location longer term, as long as we're below that level. But looking back over this ranging period over the last few years, this dotted line at the bottom here represents what I call the major value area low. And as you can see, if I just zoom back in here, price has just touched that value area low yesterday, and we're up a little today. The way to approach this, if price starts to accept this level down here rather than being immediately rejected back higher, that would be a negative indication. So if we're still part of a valid distribution that has its point of control at 121, we would expect to see a pretty swift rejection of this test down here and a rally. If you start to see price being accepted at this level, by that I mean time being printed between 114 and 115 or lower, then it's likely we're in something new. That would look pretty negative, and it started here. Okay, I think the most interesting charts at the moment once again involve, well, looking at the currencies, involve the dollar. All important to focus on these at the moment. We're looking at the dollar index, and as we know, the major, which was down here, migrated up to 94.80, and for the last few weeks we've been oscillating around that level, and once again we're back above it. We're looking for a clear higher low. Now this level here, 94.80, depending on which time frame I measured it on, whether it was daily, 60-minute, 30-minute, but back over a long period of time, gave us different readings. This was the major on the 30-minute basis, and this was not, but on the daily this was the major. I'm rambling a little bit, apologies, but the main point is that this level now, 94.80, is clearly on all time frames the major. To me that's significant, and what we're looking for here is a clear higher low above that level, and that would be, I think, a really significant development, and followed by a break above the old highs. That would put the dollar index in a new leg of this uptrend that we've seen from the previous major down here, this support. We're seeing evidence of dollar strength here. This controlling price here over 1 year, 117.55, and you can see clearly that this has been resistance on this chart, and we are printing time below a significant controlling price, which is in line with the sort of the assumptions we can draw from the other chart. In other words, potentially further strength of the dollar. And now the pound. The major has just moved really very slightly, but it's clearly now at 132 dead, and what we've seen here is resistance to that probe recently up into that level, and we've come off quite quickly, and this means that the pound is spending time here, printing time below its major, which again is a weak chart, and again that indicates strength of the dollar. So for now, at least until that changes, that kind of the scenario in those charts there, I'm looking at and just assuming that the dollar is going to strengthen until we see evidence on the charts that it's not. It just looks like evidence is certainly edging in favor of the dollar, and we have to be wary of the ramifications of that and monitor these charts closely. Okay, that concludes, and once again I thank you for watching.